Welcome back to Investing and Trading Live. As always, I am your host, Josh Lilquist, with my good friend and my good pal, the Stockmaster, Mr. Al Connickson, talking about the do's and the don'ts of the financial markets, how to make smart investing decisions, but most importantly, how to place the odds and probabilities in your favor with your short-term trading accounts. And that's really what we talked about in that last segment, is how to have the odds in your favor with your trading accounts, whether you're looking for a short-term income strategy, or if you need to build wealth for later and you need to speed things up a little bit. There's strategies that are designed to do just that. We also had a lot of people calling in and texting in. Congratulations to those that did call and text in for this investing class that we do right here in Bloomington and all across the metro area. Simply just call or text the word trading right now to the number 952-905-0975, and we can get you seats for that investing class to help you get started on your financial journey. Call or text the word trading to the number 952-905-0975, and we'll make sure we find a time and a date that works best on your schedule and your calendar. We have these classes during the week. Also on the weekends, Al teaches these, I teach these as well, and we have a good time going over and helping you get started with your financial journey. And as we mentioned kind of in that beginning segment, a lot of great moves in the markets this past week, past month, really in 2024. I mean, the markets have really soared in 2024 as far as the stock market, but not every single stock has done that. And I think a lot of people have multiple stocks in their portfolio, and some are doing good, some are not. And it may be offsetting a little bit. And their returns aren't what they are hoping that they were, especially if they have mutual funds, because what is the stat? I believe is that 90% of mutual funds underperform the market.
Underperform the index that they're supposed to perform with. That is true.
Yeah,
and that's not a good number.
That's terrible, yeah. Plus the fees that come along with them are just decimates a retirement account.
Yeah, and unfortunately, that's what a lot of people rely on are mutual funds.
Because that's all they know. They're told to do that because that's what most 401ks offer is mutual funds. And there's a reason for that. There's a reason Wall Street and your brokers and your advisors keep getting richer and richer, and you don't. If you talk to anybody that has a 401k that has retired recently or is about to retire, they're always like this. Man, I had a 401k, but it just didn't do what I hoped it did. And now I'm doing this. Now I'm doing this during retirement when I'm supposed to have the golden years of my lifetime. So, but it takes a little bit of action earlier to get started. So I want to invite people to take that first step and get started with some different strategies now. So if you're in your 30s, 40s, 50s, 60s, do that now. So when you get to your 60s, 70s, and 80s, and even 90s, you're able to either do those fun things, but you're not struggling. But I think a lot of people want to be able to leave a legacy at one point as well. Leave some for kids, for family. And it takes strategies, and it does actually take time to do that. It doesn't happen overnight, so you've got to get started now. So now with these retirement accounts, a lot of them are underperforming, even though the market is going up. Over the past few years, their returns haven't been, all that great if you think about it. But that's all relative as well. What is great to me may be great, may not be great to somebody else. So that's why you need a strategy that's designed for yourself. Now, you've helped a lot of people to build custom retirement strategies for themselves. You mentioned people are using outdated strategies, and you helped a lot of people be in the now. What's happening now, and what could happen in the future with the right investment decisions. What are some of the steps that you put in place when you're working with people here at the Academy to have that opportunity to increase their odds to get to where they want to be financially?
Yeah, well, first, ask yourself this. If you're not where you want to be financially, if you're in a hole that you're trying to dig out of, and you're not doing something different, why would you think that you're going to dig out of that hole quicker? If things are not working, you have to do something different. As I mentioned in the first segment, if things aren't working for you financially, you just are not using the right strategy. And if you need to catch up, it means that you're going to have to learn how to do something different. And we're not talking about things that require a genius to be able to learn or to understand. It's just listening to something being talked about that you haven't heard about before. It's like anything else you learn. You have to know what it is before you can actually feel comfortable.
Driving a car, riding a bike.
Yeah. But here's what I want to get back to the income versus wealth thing again, Josh, because the income portion, learning how to generate income, I think, is the most important component of your financial life. If you need to catch up, if you're playing catch up, if you need to dig out of a hole, if you even if things are going well for you. For example, the people that were in the market from 1980 until 2000 thought they were geniuses. The market was up 1,200% during that time period. In the end of 2000, they lost half of what they had. They didn't expect that was going to happen. And then from the year 2003 to the year 2007, the market is up 100%. People thought they were geniuses again. Everything was fine. They had no worries. And then they woke up one day and they rode this down another 57%. So you can't count on the fact that maybe the market has been performing well for you, but will it continue like that? And if it doesn't, are you prepared? If you're not prepared, you're gonna ride down the market, and that's going to have a huge impact on what you could have when you need that money, maybe when you retire. The market is up only maybe 50% of the time. The other time is down, either down or sideways, so you could be missing out on half the opportunities there. So one of the things that we show you how to do is to, number one, protect your assets so you don't go through those big drawdowns, and number two, learn the strategies you can use to generate income and wealth in a down market. You can use options, futures, and forex in different market conditions. And when I talk about the importance of the income solutions, the income strategies, which are short-term in nature, if you think about it, things that happen now that have an impact on the market may be short-lived. So those opportunities are short-lived. If you invest in something now and you're going to hold on to it for 10 or 20 or 30 years, how do you know what's going to happen during that time period? How do you know that what happens today is going to have a long-term positive impact on your portfolio?
A great example is that stock that you talked about last week, which was, I believe it was Intel. Well, hasn't done anything in 30 years.
No, in the year 2000, it was trading at $74 a share. It's down in the 30s now.
$30.46 as we speak. But you mentioned earlier there's opportunities shorter term for now Absolutely. At that time.
You could have used Intel numerous times during that 20-year period to have some pretty significant profits. So that's why I think it's especially with the market that's as volatile as this one is, that has these huge up and down moves. Those are the ones you want to take advantage of, and that means that there's going to be shorter-term impacts that you can take advantage of. And if every time you have a profit, if you let that profit be taken away from you, that's going to have a huge impact on your overall wealth down the road.
Another one is Nordstrom's. You look at Nordstrom's, if you bought Nordstrom's back in 2004, you'd still be at the same price it was at back then. Actually, no, sorry. 1999, yeah. Same thing.
The same thing with Cisco. So the buy and hold, people will tell you if you just hold on, things will come back. They don't always come back. Companies like Enron, for example, went bankrupt. And the week before they went bankrupt, their CFO was saying this was a great company. Everything was above board and fantastic. They lied through their teeth. They cooked their books. I'm not saying that a lot of companies do that, some do, but the point is that you cannot rely on the fact that something is going to come back during the time period that you need it to come back. Mm-hmm. Markets always do come back. I'll admit that, but it's that the downward movements and the time period between when you start losing money, you just get back to where you were before. That could be 5, 10, 15, 20 years.
The fact of the matter is, and you hit this on the second segment, is when do you get in? When do you get out as well?
Exactly.
And that's the key, is to do that in the case of Intel or in the case of Nordstrom's. There's tremendous opportunities throughout the last 24 years with both of those stocks. But there's timing in there. It's when to get in, when to get out, realize those profits, and then maybe even shorting the market. There's huge opportunities multiple times, but also multiple directions. And a lot of people just don't understand that's even available. You know, Al, that's why we have these investing classes, because we're introducing these concepts, these techniques to everyday people, regular people that want to get in the market. They want to have those opportunities and not just hope that things work out. They want to add those odds, add those probabilities in their retirement accounts, and not just buy and hold and hope for the best, which is just a gamble in my opinion. So simply to come into these classes, it takes a little bit of time and a little effort. You got to drive somewhere. Yes, you may drive 15, 20 minutes, but I think people do that every single day heck, it takes sometimes people 10, 15 minutes just go to the grocery store and back, or the gas station. And so I want to invite people to an investing class to get started on what these techniques are, what these concepts are, to make smart investing decisions. So you're not just hoping for the better, you're actually doing for the better. Simply call or text the word trading to the number 952-905-0975. That's 952-905-0975 to receive 2 seats for an investing class right here in Bloomington or a location near you. Call or text 952-905-0975. Al, we got one more segment to go. Coming up next, we're going to talk about different strategies and more opportunities that we're seeing in these markets right now. This is Josh and Al, Investing and Trading Live. We'll be right back.